news flows have been positive over the last 1 week. Whether it's geopolitical tension, there has been significant reduction in Israel-Hamas stress. Also, China has toned down the rhetoric on multiple geopolitical fronts, and that has definitely helped the sentiments. We have a scenario where the oil prices have been down and have been range-bound. That does help overall the global economic scenario. And finally, we have the US bond yields coming down, which does bring back the risk-on mood. Very clearly, higher for longer scenario is not any longer valid as far as US markets are concerned. And we are looking at a scenario where there will be probably between 100 to 75 basis point rate cut in the next calendar year, maybe in the second half by the US Fed. Now, this all definitely sounds like a music to the emerging markets, and global investors have become once again, risk on mood has come back, and the risk aversion has reduced significantly. That is even reflected in Indian markets when the short positions have been reduced significantly and some longs have crept in. There still remains one factor which needs to be highlighted as far as Indian capital markets are concerned. For a global investor's perspective, Indian market is probably still richly valued, and relatively speaking, China, Taiwan, South Korea, and some other Southeast Asian markets are looking much more attractive. Now, these are tactical bets, and some of the foreign inflows may move into these markets purely for tactical reasons. The long-term strategic investors, structural story-based investors will continue to prefer India and will start bringing money to India once again. That's the analysis, and that's the conclusion as things stand today. As far as domestic information and domestic news flow is concerned, corporate results have been by and large pretty good, mostly better than expectations. However, uncertainty remains over state government elections in few major states, results of which are expected to come out on the next Sunday. We also have a scenario where RBI has come and significantly increased risk weightage for unsecured lending by banks and NBFCs. Now, this does put a brake on unbridled increase in unsecured loans, and probably will bring pressure on NBFCs and some of the banks as far as their margins are concerned and capital adequacy is concerned. We will see a slower credit growth, and this is probably the reason why the bank Nifty and the overall BFSI sector has been a bit subdued in spite of positive news flow from global markets. As far as Nifty is concerned, we believe that Nifty is range bound and will remain range bound for some time, as even US markets are closed on account of Thanksgiving, Black Friday holidays, and there will be no major upward or downward movement probably today and even Monday morning. As far as we look at the future, we continue to believe in the long-term structural story of India. We believe that construction, infrastructure, cap goods will continue to outperform and deliver results. There is still some scope in buying good quality stocks like a Larsen or a Reliance Industries. We also believe that cement, building material, capital goods will continue to do well, and there are pockets of opportunity sitting in these sectors which investors will do well to accumulate even at current levels. We maintain our positive view on Indian markets with a very clear focus on the medium to long term. Thank you.